Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, we learn how Barrett managed to break into investment banking out of the University of San Diego, even though he didn't know what investment banking was until his junior year. He gives some must-listen advice on networking, how to interview when you're not a subject matter expert, and how he was able to find the right opportunity in venture capital coming out of investment banking on the West Coast. Enjoy. All right, Barrett, thanks so much for joining the Wall Street Oasis podcast.
Yeah, no, pleasure to be here. Thanks, Patrick.
So it'd be great if you could just give the listeners a quick summary of your bio.
Yeah, absolutely. I graduated from University of San Diego, 18, and studied finance there. And prior to that, my rising junior summer, I was an intern at a hedge fund, small family office, macro fund in La Jolla, California. So local to the university down there. Parlayed that into a internship with the University Growth Fund, which is, we'll get into that a little more, but that's a super interesting opportunity where you're essentially a student managed venture capital fund. It's based out of Salt Lake City, and I was out of our San Diego office, and then parlayed that forward about a year after graduation into a full-time analyst position at an investment bank, DA Davidson. I was in our technology group for the vast majority of the time there. And then just recently, about a little over a month ago, joined up here a family office in San Francisco, and primarily seed and Series A tech investing. So, short journey in the grand scheme of things, but it feels like a longer one, and it's good to be up here.
No, yeah, I think it's great to chat with you because there are a lot of analysts on the site that are kind of thinking potentially VC family office, and just hearing about how you, and from non-targets breaking into banking. So just hearing how you kind of positioned yourself through undergrad and going to a non-target, I think would be interesting. So let's start all the way back. So where are you from originally? And just give a little bit more about like freshman year. Did you know finance was like your dream or VC? Or like
short answer is no. Short answer is absolutely not. No, high school. I grew up in Laguna Beach, California. So Orange County kid, born and raised down there, and staying somewhat local in California, but certainly not the East Coast. And it's a different vibe as you're very familiar with. But yeah, my first actually experience, and I think the vast majority of kind of my career is less finance oriented and more entrepreneur oriented. And I think the finance component is kind of a step into the entrepreneur world. I actually had a volunteer hour-long 11 p.m. on a Sunday night segment on our local nonprofit FM radio station in high school. And it was kind of that autonomy and that, like, 4 listeners, one of which being my mom, like scrappiness that I kind of identified with founder stories. So from there, kind of grew into relationships with founders, whether or not they were just in my network or outside of that. So kind of drawn to growing things. And I call it just kind of the lifestyle of building versus just pure finance, which is what you get.
Did you ever start anything in college or anything like that?
I actually kind of rolled out part of that radio thing. It was a sports talk show. And what I turned it into is actually like an editorial, and I got like 30 high schoolers and first, second year college kids website. And it became politics, music, and sports. So everything that our parents don't want to listen to us talk about at home, we talk about it on editorial. So I actually did start, it was called offthebeat.co because we could not afford the .com. Me and a couple buddies did that and made a couple $1,000 in Google ads. And that was the extent of the actual entrepreneurship. And I think
if you made a couple $1,000 from Google ads, that means it's actually not a decent size. It was actually a pretty decent size. My point is like you get pennies on per thousand,
especially back then too. That was what 2013 too, and it was the click ad space was very different back then. But the amount of content that we had versus the amount of, I don't even want to call it revenue, but Google bother that we were putting out there was astronomical. I mean, we probably had 100 articles or so, and maybe 100 clicks in a week. It was small, but and most of them were, again, moms and dads are like, okay. Like,
well, I want to talk about. Can we talk a little bit about that? Because I think it's interesting for people who are thinking like, I want to start this thing on the side, and I'm going to go jump away from banking and start this, this editorial thing. Tell
The
me a little
passion
bit.
economy, right?
What's that?
The passion economy. It's a thesis we hear a lot, actually.
Yeah. And so tell me a little bit about just what you thought going into starting that. So for other college kids or high school kids, maybe there's some high school kids listening, but like what you thought going in there, like what you thought was going to support the business model. Cause I know when I started Wall Street Oasis, I was very much like similar, like, oh, we'll run some ads and it's all about just getting the engagement. And we've kind of fallen into a decent little business here, but it's been 14 years. It's not like we're not huge, So tell me a little bit about how you went about thinking about it. And then some of the difficulties of like you started with friends, I assume. And then like the vision, did it change or did other people have different opinions of what was going on, why it wasn't scaling, stuff like that? I think it's interesting to hear.
Yeah. Yeah. And I wish I could provide more of like my current mindset towards that, but really it was the most intrinsic value thing you could think of. I enjoyed writing. I enjoyed content. I enjoyed kind of leading in a sense. And there was no, hey, I want to make revenue off this. It wasn't.
Were you the sports person? Were you the politics? Were you everything?
I was a sports person. And and my co-radio host, actually, it's called KX935. If you're ever in Laguna Beach, it's the only time you can listen online too, but you can listen to that. Yeah. And my radio co-host was, we actually met in Modeling United Nations, which is another great program if you're listening in high school for whatever reason, if you want to learn how to talk and debate and do whatnot. Okay. That's how we met. And then all of a sudden he's like, I like radio and I like politics and you like sports. Why don't we just talk about it? And cool. That, we had that 11, like I kid you not, it was 11 p.m. Sunday nights. And it was an hour long and it was volunteer hour. So it was funny. But, there was very little grandeur vision. There was very little, like he actually had the idea of, hey, like, why don't you try to put a Google click ads on this? Like it wasn't even a revenue scheme. It was, I think in the back of my mind, thinking back on it, it was more of college play than anything else. It was, hey, we have 30 or 40 kids that are going to college and all you get is your application, your GPA, and your whatever 2,000 word essay on the Common App. What if we can just click a link and then all of a sudden you have your voice, you have 3 articles that you've written on politics, sports, music, whatever it is, and you can show a little more of yourself, some substance. And that was the core.
I think that's awesome. That's great feedback. I think people have to be careful with that, especially on the sports. I think a little safer. Politics for sure. Be careful putting that out there because you come across one interviewer that disagrees with you or whatever, sits on the other side of, especially and nowadays. Boom, even if you're moderate, like.
They will. I mean, everyone will find a way to disagree with politics, right? It's really hard to disagree with sports and then actually have like vitriol dislike of that person. It's like if you're wearing a Pats hat. I'm a big Rams fan. Yeah. I'm not holding that against you right now as much as I want to.
You can. It's fine. Go Celtics. They won game 1. I'm excited about that too.
We got our game 1 tonight, so we'll hold out on that one.
Lakers, of course. Lakers. Yeah. Nice.
So we're antithesis of the sports spectrum.
You think the Lakers have a chance?
There's a chance. I mean, you have Anthony Davis and LeBron James, 2 best athletes at their positions.
You think you're not worried how they're playing in the bubble at all?
Oh, I'm terrified of how they're playing.
Yeah. Okay. Fair. All right. Let's move on. So so there's no grandeur. It was kind of a play to just help enrich your college applications.
Yeah.
You get into. Did you apply to other schools besides the University of San Diego? What was the thought process of going there? And then tell me about.
Yeah. It's actually probably a little. More complex than that. I actually did not go to USD out of the spectrum. I went to the University of Michigan, Ann Arbor, to start with. And as you can imagine with my high school background that you know a little bit more about, I actually went there specifically to study sports management. And I applied to a couple other schools and I really liked the sports management. I kind of wanted to be Jim McGuire because I saw a movie and applied to Syracuse as a great sports management program and a Kelly School of Business, not sport management, but business program. I was kind of thinking, with the sports kind of core, I want a big sports school, a big brand, a big name and network. And it's funny because I actually ended up graduating from USD, which has very little of those. No offense to Harbaugh's former football program, but it's just a different environment. So when I went out there, I very quickly realized that major was not about making Jerry Maguires, and I also realized I didn't really want to be that. As I was, took more classes and whatnot, I kind of was gearing towards the public markets actually in finance. And I kind of like the sports dynamic of being able to take a bet on a theory and you're either right or you're wrong. And that's what finance kind of enables. And sports, and that major specifically, I realized it was more of a sports marketing geared thing. But
why not stay at Michigan since it has a strong business program?
Getting to that point. Right. So you apply after your freshman, sophomore year. And Ross, a top 3 business school, phenomenal.
Mm-hmm.
I did not go to that school thinking I was going to apply. And then a year in, when I was already behind the gun, didn't do any of the extracurriculars, probably didn't have the grades to get in. I had that decision to make where I was like, okay, now a year in doing finance on the side, whether it's public markets or whatnot, I realized I want to do finance in some capacity or another. And I also realized if I'm going to take the chance of getting in there, it's going to take me 6 years. And if I don't, I'm not working in that industry. So I very quickly realized that and parlayed that into looking at other options.
What do you mean it was going to take you 6 years? What did you mean by that?
Yeah. So sports management is actually in the school.
Oh, sports management. Okay. So yeah.
I couldn't take my prereqs. I could take Econ 101 and stuff like that, but there was a lot of things that I was disadvantaged because I just didn't know that going in. And if you know anything about Ross, there's pre-admits too. And a large portion of the class is already in there. And if you're not in there, you're focused on it from day one. You're doing everything you can to make the best application. And I just didn't have that or the grades or,
for grades like 3.5 or higher, 3.7 or higher, something high.
Probably 3.7 is really impacted. It's like a 3% acceptance rate. It coming from at least a school of sports management.
Yeah, so it's pretty tough.
Yeah, it's tough, and justifiably so, because it's an unbelievable school, and I have so many friends that came out of there, did great jobs in New York and Chicago. And I think a second component is I actually knew I wanted to work in California. And all of a sudden, when you start looking at going to school like USD or USC or whatnot out here on the West Coast, you definitely take a step down in the name and notoriety, the target status and whatnot. But geography definitely plays an impact. I mean, Michigan kids, for the vast majority of them, they end up in Chicago or New York or Boston. And coming out of San Francisco was obviously with a name on Ross, like it's possible. But I was kind of willing to take that chance, and it wasn't a huge deal for me. It was kind of just like, I want to go study finance. I'm going to go do this somewhere else. Because I think I have a greater chance in. And, so fast forward to going to USD after my freshman year, lifestyle is also different. I very much so enjoyed, Orange County kid, hand up, like I like the beach, right? So going to USD like has that draw, absolutely. And and then USD also ended up being an incredible school for a network. I mean, it's a small school down in San Diego that, you say USD and they're like, so University of California, San Diego State, or USD, and you have to clarify almost every time. But for the small network it has, it's a very tight knit network. There are a lot of people that will go to bat for you. That at a big school, like absolutely name recognition, big alumni network, all that good stuff. But like if I'm a hiring manager and I went to USD, and I had this experience actually at DA Davidson, my technical interviewer was a USD alum. And all of a sudden it's like, okay, there's a lot less kind of fish in that sea. And then all of a sudden when you find one, it's a lot more rare. And there's probably a little bit more of a connection there too.
Yep. Fair. Okay. So tell me a little bit about, so you did the transfer, and you knew you wanted to go finance at that point. So you said, okay, I'm just going to stay University of San Diego. Did you consider at all going to like a other school, or did you feel like your grades weren't high enough at Michigan to get into like a super, like, I don't know, maybe like a UC, like an Anderson or a...
So that was a tough one. I actually grew up a UCLA fan. Both my parents, uncles, everyone went to UCLA. And you need 60 units. You need 2 years essentially to transfer to either a state school or a UC school. So when I really wanted to dedicate to finance and decided leaving Michigan was a real possibility, I could only apply to essentially private schools in California.
Got it. And that's
which parents in my financial scenario were not extremely excited about that. But USD also has a really good merit and need-based system where they do help a lot of kids out. So
cool.
That's another plus for USD if I haven't given enough of them a plug yet.
Yeah, great. So you're basically coming in there. You're as a sophomore, correct? Now you're loving life on the beach. Lifestyle's a little better. Did you find like it was? Did you find like immediately you were just networking right away to try and land like internships? I know you started. I think that first summer after your first year, you had some hedge fund internship, right?
Yeah, that's exactly right. So I had the benefit of coming from a big school and realizing what that network meant. And I also had parents that, I don't know if I told them that I was thinking about transferring until I actually got in and made the decision to transfer. So that was a different conversation. But I come from a family that's very real. And in terms of like, you are taking a drop down in name, it's going to be harder. How are we going to fill those gaps? Because there's ways to do it. And kids at non-targets are scrappy because of this. And networking was top of the list. San Diego is not necessarily a powerhouse market for finance at all. But there certainly are folks that you can network with there. And for me, it was pounding pavement, cold calls, cold calls, cold calls. And it came from a USD alumni network to coworkers, and it just rabbit hole from there. And I made that dedication to sit down, pen and paper, and say, here's my list of 30 people that I'm going to call today. And LinkedIn wasn't, I don't even know if I went through LinkedIn, because I don't even think I was on LinkedIn back then, to tell you the truth.
This was 2016, I think.
This would have been 2015.
15, really. Yeah. So tell me a little bit about just how are you getting those names initially, that first batch? It sounds like you were able to turn the initial batch to kind of a spider web, like you said, the rabbit hole, where you're able to kind of get passed on to kind of with referrals. But tell me a little bit about that.
Yeah, so the entry point for me was a lot of alumni. In San Diego, there's some crazy stat that I won't butcher off the top of my head, but a lot of San Diego USD alum and San Diego State alum live in San Diego post-grad. So it's a very strong network post-grad there. And I kind of knew that and realized, and it's a lot of asset management as opposed to other high finance roles. Like, there's not a lot of investment making there. There's not a lot of hedge funds down there. There's certainly not a lot of VCs down there.
Yeah.
Although the ones are there doing good stuff. But so I kind of knew that and realized, I'm going to go through alumni networks, and then at the end of every call, I'm going to ask, hey, is there any other alumni that you work with or that you work, you're in contact with and you work with that don't work with you that I can network with? And, eventually that wealth management, financial advisor, asset management group in San Diego really started like opening its doors. And especially as like a local kid from a non-target, you can play that story right to at least get your foot in the door. And I was really fortunate to get in with a place called HAV Capital. That was the CIO and founder there was the former CIO of Nicholas Applegate. So trillions of dollars under management in his experience. And that was at the stage that he was at. And it was a 4-person family office. They've since merged, but it was an unbelievable opportunity for a kid that really had only taken 2 semesters worth of of low level finance, maybe accounting classes to get. And I was sitting next to him every day during that internship. And, at some point in that summer, that light went on. And I said, I really like this. I think I can do this long term. And it wasn't, hey, I know I need to check the boxes with internships and with relationships and stuff like that. It was, okay, I actually really enjoy doing this. And all of a sudden, when that click goes on, that self-motivation goes on, it will drive you a lot further and make you a lot, frankly, better at your job.
Yeah. So you're saying it was like a family office hedge fund kind of, so you're doing like long, short equity, what type of stuff are you doing there?
Yeah. A lot of long, short equity plays, a good amount of merger arbitrage, a good amount. So wake up in the morning and all of a sudden LinkedIn's getting bought by Microsoft. What's going to be affected by that in the markets today? How can we get in there in the next 30 minutes? So as the unexperienced rising junior intern, I was not making those decisions. I was trying to answer very basic questions that my portfolio managers were pushing down to me. But they were very
What were
good
your
about
hours? What were your hours?
9 to 5. No overtime, pay stubs like that. So,
okay.
And the La Jolla family office vibe, as you can probably imagine, isn't necessarily like, hey, we have an intern, let's work him to death. It was like a give back opportunity for them. I mean, the value that I was adding them was nowhere near to the value that I got back, right? I mean, I was going to lunch with the portfolio manager group every day because they were just nice enough to let me come. And so for me, it wasn't about, hey, developing raw skills. It was actually, how do these guys think? How do these women
But how did
think?
you even like get in there? How do they agree to this? It doesn't sound like they have an internship program.
Don't have an internship program.
So tell me how you convinced them to take you on to do this.
I don't know if convince is the right word.
Because that's more interesting to me. And I think that's more interesting to a lot of people. I think that's, well, okay, great. He got that internship, but how do I get it? Is what I can hear all the listeners saying. And it sounds like you're a good speaker. It sounds like you're comfortable around people. So were you just schmoozing them so well that they were like, yeah, buddy, like, come on, hang out and this for the summer, or like, what was it like? Were you like, hey man, this is just tough from a non-target, and there was enough of that alumni connection to be like, let me just sit and like.
No, it's a great question. And I think that story actually doesn't play the way that I maybe thought it did back then. Hey, like, pour me in from a non-target like that. And I don't think a lot of people will listen to that. I think it's where non-target candidates excel is when you see their passion. And all of a sudden it's like, hey, maybe this person didn't set themselves up in high school or they transferred or whatever the story is. But if you just have a conversation about public market investing for this hedge fund, for example, right? You can have a conversation about, like, I remember that summer, we did a long short play on the Rite Aid Walgreens position. And if it was going to clear and if there was going to be FTC denial and stuff like that. if you're just able to have an intellectual conversation with that impresses people. And so,
but you were able to do that before even talking with these people before?
Absolutely not. But the point of why I say that is to give context on like where the passion comes through. And like, if you are intellectually curious and you say, okay, I had one call with this person and I learned what they're thinking about on their day-to-day job, and the Rite Aid Walgreens things comes to mind because first call I had with the CIO there, he brought it up, and then I went back to the drawing board, looked it up a bunch, and then my next call with him, I was able to conversely talk about that.
Got it.
And more importantly, it wasn't from a space of, hey, I'm going to share with you, and this is what a lot of interviews turn into, and it's probably not the best way to do it. It's, I'm the interviewee. I'm telling you how much I know. It rarely works. When you turn it into a conversation, and I'm sure you hear this all the time, when you turn that into a conversation, you say, hey, what are you thinking about? You let them talk a little bit, and then you can just have a conversation about, okay, if this doesn't go through and the FCC blocks this, then how do you play it? And you start thinking commercially. That's how you show that you're genuinely interested in the position. And you could do that position on a daily basis as opposed to trying to make a connection to a textbook, which rarely turns into a real conversation.
Trying to show, like how to walk through a DCF and like, no, do evaluations is not going to work. Yeah.
And you'd be surprised at how many, as an IB analyst, as full-time analyst, I was a first-year analyst, and you get hit up on LinkedIn as you should by, folks that went to your school and whatnot. You'd be surprised at how many conversations turn into how much I know versus asking and truly seeking the information that will be valuable from the call. I always talk about this is like, in what I've been successful in networking in, is instead of having an agenda on what I want to get out of the call, it's, hey, how can this conversation be more useful intrinsically? Not saying, hey, who's the next person I could talk to? Always try to add that to the next. That's just how networking works. But, instead of how can I impress you, it's more, what can I glean from this that's going to make me better at your job if I were going to sit in your seat a year from now?
Yeah, it's actually being genuinely curious.
And it's as simple as that. And
it's being
it's
genuinely
really hard
curious.
to force that.
It is, but it's, and I always say, like, the best time to network is when you don't need it, right?
You always have to network before you need to network.
Before you need the network. So tell me a little bit about, like, when you started networking, you kind of needed the network. How did you still come across as just genuinely intellectually curious on these calls where they didn't feel like you were like some desperate kid trying to just pine for an internship? And then just tell me, how did you actually get that? Like, were they just were impressed on that second call that you came back and you were just talking smart, intelligently about it? And did you write out and just be like, hey, it'd be great just to sit next to you just for the summer? Or how did you kind of close, I guess?
Well, actually, when I got introed, there was a internship that they were trying to open up.
Oh, they were?
And it was, it wasn't like I was, hey, can you
creating your own? Got it.
Which is a lot harder. But it was, I had a good meeting with a financial advisor in North County, San Diego. And he's, I have a friend, Horacio at HAV, who is thinking about taking on an intern. Again, it was, more of a giving back than a value for the summer. And when I was able to meet them, I think it was just really fortunate timing and, showing that passion and showing that scrappiness, even though I knew less than nothing about the job, that can come across. And I don't know how much you hear about this, but I would have to imagine a lot of those types of internships, the non-structured ones where they don't have a yearly class, a lot of luck, a lot of timing. And that's why you have to get a good amount of numbers out there, but then focus on what makes those numbers quality.
Yeah, good number of numbers. You mean you actually have to be putting in the work to be even coming across those very random and infrequent.
Yeah, because I think that internship was like 6 connections deep. It was like alumni network, and then I worked with someone who I'd be interested to talk to, and like
the 7 degrees of separation or whatever.
Truly. And I think that and like it sounds very vanilla because I'm shortening it, but of those 6 connections deep, I'm pretty sure 2 or 3 were just like, flick, I don't want to talk to this kid. Who can I, pass the buck off to?
Interesting. Like you could sense that they're like, just get rid of this call. Like, I'm done with this kid. Yeah.
Yeah. Like, I don't want to give the impression that like, oh, all my passion came through and I was well researched and all this stuff. Like, I'm sure there were things that I said that people on the other line were like, what is this kid blowing smoke on? Like, I don't even understand it. And one of the things that I actually, got feedback on is I was over ambitious in these things. So I came through and I was like, oh, what about this idea? What about this idea? And it's like, you haven't done anything. And it's really hard to come from a position and start showing that excitement in a way that's genuine. But the wrong people, or the wrong fit, I should say, are going to be that and say like, okay, you're way too ambitious. I'd rather have a kid come in head over heels and start throwing me a million bad ideas and show that passion than sit back and just do the textbook and try to tell me how much he or she knows.
Right. Interesting. So yeah, the textbook intro of how much he or she knows. That tell me about yourself. That walk me through your resume. I think.
Mm-hmm.
Tell me about it. Did you get that a lot in these kind of informational we'll call them informational interviews for lack of it.
Yeah.
You wanted to turn it into a conversation.
They were informational.
But you were smart enough to kind of try and turn it into a conversation. But did any of them try to have you like walk you through their resume, and like how did you approach that to kind of steer it back to a conversation?
Yeah, no, it was more. It was less of hey, like tell me about your resume. It was more like, hey, what if I give you some context about myself first? That would probably be a good place to start, and then I can hear your story. And that's how it usually works in these kind of things. The junior person that wants information, well, here's how I kick off. You could tell me a little bit about yourself, and the person that's receiving the call then goes, and then you can have a conversation after you have like kind of level ground on background.
Fair. Okay.
That's kind of how it went best and most organically. And one thing that I think is really important, I didn't learn this until deep into my like senior year, probably like early senior year, like investment banking, recruiting. The story that you tell matters. It's not checking boxes. It's a single narrative, and everything else adds up to that narrative. And when you can tell the right story that's genuine about you, that's not manufactured, that shows every single time. And almost all of the conversations that I had on the other end of the line when I was an investment banking analyst, I would always get that feedback. And I think that's extremely important because you could easily look at my resume and say, okay, hedge fund, VC, investment banking. Now I want to get investment, and now I want to get in VC, which is modern day. Mm-hmm. Why? But if you wrap that story up from head to toe with here's where my passions lie, and notice in the beginning where I say, hey, it's always kind of an entrepreneurship story. If you could filter those things along the line and weave the story as opposed to saying, check, 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 now this is what I want to do, so much more impactful, and it comes through so much better. And I hear kids do that in a really good way. People are really unique on how they got into certain situations.
Got it. So you're saying when you're kind of taking calls, or when you were taking calls from USD students when you were at Davidson, did you feel like there was a lot of improvement there that could have been, or you felt like they were pretty polished? Obviously, it's a wide range, right? Some kids are like a disaster, and then
huge range. And I think that candidates know how to tell what they've done. Maybe there's a better way to say this. Let's just say what I was saying before. Maybe it's more concise. People know how to say what they've done. It's hard to say why they've done it. Right? And when you can weave those two together as a narrative, it shows a lot better. And the difference between, if you took 3 calls a week and you had, I'd say 1% of the folks that I talked to would have that last notch instead of here's what I've done versus here's the narrative and here's where I'm going. That's the biggest step, because you can have the Goldman internships, the Apollo internships, all that stuff. Mm-hmm. But if I don't know like why you want to do something, the motivation, and it's not this like tied up little neat bow, which says like, oh, he or she like has to be here next year. Like I need to work with them next year in our technology team in the bullpen next to me. Then all of a sudden things click, and it sounds like way too simple, but that happens because you're telling a narrative that you have carefully constructed, and that's genuine.
How did you construct yours? Because like you said, you had the hedge fund, the VC. So tell me a little bit about how you
move into that.
Let's jump to senior year. We can. Let's go in order. So okay, before we get there, and we can come back to the narrative a little bit in terms of how you wove it together for your IB recruiting. But so you do this internship over the summer. It sounds awesome. Like you're able to sit there and just hear and bounce ideas with the CIO. Sounds like of this.
And then it's less glorious. I mean, there's a lot of LP statement making and stuff like that, but I got to hear his thoughts. Yeah. And it was Brexit summer too, which was incredible to be a part of.
Okay. So you kind of come back now junior year, correct?
Yeah.
And so are you thinking, is IB on the horizon here, or what's the deal?
Nope.
Did you even know what investment banking, like you didn't even know what it was? Yeah.
Nope. And in USD, and again, it's not a very sophisticated target, or it's not a target school for the reason because they're not in the tune of the schedule. Over 70% of USD kids go abroad their junior year, their first semester. That happens to be the most important time for high finance investing, banking, private equity, internships. Yeah. I was abroad. I was in Madrid. I came back and I very quickly realized I kind of thought I might be able to go back to the hedge fund that summer. But maybe it hadn't clicked where I needed to go step by step from, hedge fund to VC to investment banking back to VC. I don't think that really clicked. And University Growth Fund is this VC fund that I was telling you about, that came in through a professor that said, hey, you might be interested in this. And what it is, for those that don't know, it's a student managed hedge fund, but $30 million fund, the last one that I was a part of at least. Not hedge fund, sorry, VC. And they're based in Salt Lake. And their theory is they have 2 full-time partners. And they're sourcing partners, and they have really good connectivity in the Bay Area and the Salt Lake City area and otherwise. And they have ample experience before. And this is kind of their second part of their careers. And what they'll tell you is they think if they source the right opportunities, that students can execute upon them and provide the right diligence. And, if you filter that through a seasoned investment committee, you can develop a really strong portfolio. So our portfolio there, stuff that I worked on individually, Spotify, 23andMe, I know Flexport came after us.
Do you guys put money into it? You put money into those deals?
Yeah. And again,
that's awesome.
Sub $1 million checks and co-investing, but they have these co-investing relationships that are really interesting.
Yeah.
So when we would get in, it'd be part of an SPV, but at the end of the day, the ownership stake doesn't necessarily matter to the junior or the senior that's just trying to learn the industry and why do we invest in what. And
SPV, special purpose vehicle. It's just an easier way to kind of group investors to
exactly right. Yeah. So you don't have to have direct access to the CEO, but if you have access to the lead investor on the Series B, you can get into that round as well.
Got it.
Sometimes if they're generous, and there's a value proposition that University Growth Fund students can add in terms of different market studies and surveys and projects that we would do regularly. Exactly. And kind of, again, the give back opportunity.
Yeah.
When I won't get too much into it, but when a Series C lead is saying, I could give, $800K of this allocation if I'm doing a $15 million round to a student group, like that might be enticing and is enticing for some leads. So, and the structure of University Growth Fund is incredibly interesting. You come in as an intern. Some of those interns after that summer will get held as associates. The associates are kind of the backbone of the fund. And if you think about it on a day-to-day, week-to-week basis, it's producing investment memos from everything from market size to the product market fit, competition to the financial model. An associate might have 1 or 2 of those on each investment memo. And then a select few will become senior associates if they've been there for 3, 4+ semesters. And then those are actually leading the deal. So the whole investment memo goes up, filters through them. They help pitch it to the student group and then subsequently to the investment committee. If there's management calls and co-investor calls, they're leading those. It's a principal level opportunity for senior and college
kids. That's unbelievable.
It's
called the University Growth Fund. And so do they take students from all over the country?
No, they focus on San Diego and Salt Lake City.
Okay.
So they're Salt Lake City based, U of U, BYU,
but there's
USU.
probably other funds similar to this, right? In terms of
so they're the biggest one. At least that I've heard of and that we've heard of at that fund. And it was a $30+ million fund, and they're raising. They're trying to raise the next one. I don't know how big that one's going to be, but they've been fairly successful, especially with that model and way to give back. And
you were there almost all junior year. Is that
so for 13 months about? So I got there in like May 2017 and left in maybe June 2017 and left in July. It's funny because we invested in Pinterest and I was our senior associate on that deal. And our GP there was like, hey, I would let you lead this deal if you want to, but you're graduating in like 4 weeks. I don't want to make you work past your graduation. You already have a job. You had the job that fall. And I was like, no, it's Pinterest. I want it. So that's why my end date was actually July. So I had 3 weeks off between banking and that, but the exposure level, and this is what you get from a program like that, is you get out of it what you put into it, very much so. I mean, if you want to skate through that program and put your name on a couple investment memos, but do very small parts, or you can pour into it. And there's kids that do 20, 30-ish hours a week and on top of classes, on top of actual jobs and stuff like that.
So that means like doing more of the actual memo, writing it up, doing the research, doing the market size, all that stuff to try.
And like, if you think about it, there's 2 different levels to that, right? Like say you're an associate, you have a market sizing section. You can go look what IBIS says, and it's a $20 billion market, and you put that on the slide, and all of a sudden it took you an hour. Or you can really dig into it. You can do bottoms up build or top down build, and it's obviously shows, but it's your decision, and you won't get out of that program what it can give you unless you put that time into it. And there are some incredibly scrappy and smart, bright kids that come out of that program because of that enablement factor.
So you got that kind of VC stuff on your resume by junior year, but tell me about, and then you were in Madrid for your first semester, or for the
first semester junior year. So I actually came back from Madrid, and then they were hiring in the early first semester of my junior year in 2017.
Yeah. So you got that, which was great, but tell me a little bit about, at this point, when did you first hear about, okay, investment banking? Like, what, because it sounds like you were working with that fund through graduation.
So one of the great things that University Growth Fund does is they regularly have recruiters come in and do information sessions. Davidson was one of those. And so we had, I mean, at a given time in the fund, you have between 20 and 30 like interns, whether they're analysts or interns or associates or senior associates.
Right.
And so like that call itself was like a 10 to 15 person one. And Davidson has a couple of different divisions within it. They were giving an info session on investment banking and equity research. That's when I learned about it from the first time, honestly, and followed up with the recruiter after that call and said, this sounds awesome. It happened to be in Orange County where I'm from. And it was, you know, the personality fit of the folks that were in that investment banking group was a fit. And it was honestly, people like actually laugh when I tell them this. I had one investment banking interview. That was it.
That was it. And so you got this, it was an info call. You spoke with the recruiter, you just called up the recruiter at Davidson?
Yeah. So again, University Growth Fund, it was like a scheduled, you know, our students are going to get access. Yeah. And then, you know, she was nice enough to say, you know, if you're really interested, call me after this. And I think it was like, hang up, look up the number, call. And immediately it was like, okay, like they prioritize local kids. So, you know, Southern California university background, grew up in Orange County.
Perfect. Yeah.
It kind of checked those boxes. Davidson does this, and I think it's smart. I think a lot of other middle market banks are doing this is they'll look away from the target schools and look at like the next tier that's right below that maybe. And they'll look at like the best of the USDs, the Claremont McKenna's, the USC's of the world versus, you know, the
Claremont McKenna has, Claremont McKenna licenses.
And that's a really good program.
They license our courses, and they have like this little IB, like 40 kids that go through it that plays pretty well.
So it is nuts to like start your full-time analyst and talk to your other classmates and say, all right, well, like, what does your school do? And you hear about stuff like that, and it's like nothing. Like if I didn't have University Growth Fund, like USD wasn't having that. And their USD places great accounting, but finance is something that they have yet to establish internally as the infrastructure. Which is like
they should talk
USC is phenomenal. Talk with them. Yeah, absolutely should. And I'll put you in contact with someone in their career development office.
Yeah, we don't go after it very much because just selling to universities is kind of a nightmare. It's like it's like a year and a half selling cycle, and we give such huge discounts. It's like, okay, all the effort spent on that selling, like we could just sell.
The margins aren't there.
Yeah, we could just sell an extra 5 courses individually, and it's the same amount of money for like going through all that.
Yeah.
You know what I mean? So it's one of those things where like, it'd be great. We want that. We've actually been partnering a lot more with student organizations because that's so easy. Yep. And so we've been doing that. And
to give you context, like I didn't have an investment banking club at USD when I was there. It's starting to get more and more because kids are just smarter, and there's Wall Street Oasis is out there, and
they should start one. Yeah, the couple.
So they did a year after I left.
Like,
it was funny. There were 4 kids and this is part of my senior year. Yeah. This is actually after I got into DA or signed for DA Davidson. There was this national investment banking competition, which was hosted in Toronto by an organization. There's like 300 plus organizations. 30 got invited. Yeah. It was great. I absolutely loved it. And we lost in the final. So we presented in the whole final gala and then lost to Queen's University when it was hosted by a panel of 5 Queen's University alumni. So I won't say anything there, but
that's pretty good to get the finals though. That's
awesome. But what was nuts is I didn't know of a lot of investment bankers coming from USD before, older than me, at least like immediately older than me. And of those 4 folks on my team, it was myself who went to Davidson, one went to BAML, one went to Moelis and started the investment banking club a year after it, and the other went to Cowan. So it was like, maybe there's something here with USD students. So they started the club a year after, and I think I know a lot of kids that are calling me now, and all of a sudden it's like, okay, this is starting to mesh, but they're just figuring it out, and hopefully they get further and further.
Well, we'll partner with the club first, then we have to. That's like 2 emails, and we're like done, and you
have your target audience, right? It's a lot more refined.
Very, very true. Okay, so So you do the one interview. So tell me about like the super day. Was it hard? Was it like, were they more just about fit and they knew you're a hard worker and then they were happy and they're like, you're hired? Or, and then
No, it
how
was more of a traditional investment banking interview. And again, I called the recruiter and then I had like two more calls. It was like the timeline was crazy. I think we were a little late in as UGF. It was like a Monday call. I had a call with the recruiter on Tuesday, someone else on Wednesday, and they were like, "Can you be here on Friday for the super day?" And I was like, "This is out of my control."
so
At this
you're
point.
like
So I'm like,
starting
"Of
to like,
course,
you're like,
I know all about it. I'm totally prepped for this. Absolutely
did
nothing.
you
Like
know
didn't
about
have it.
did you know about the WSO interview courses at that point, or were you just digging
No,
online for anything you could get?
I had a couple friends from different schools that were in investment banking. I was like, "Can you send me the study guide?" There's the study guide. So it was one of those things where there was like a 35-hour mad dash to just being competent. And even then, like I wasn't. And going into it, I never faked to be the perfect investment banking candidate. I always said like, "Hey, I know finance pretty well, and more specifically, I know what makes companies tick." And that was from the University Growth Fund. So I played that angle a lot more. And I said, "Hey, I know you guys sell middle market technology companies or whatever companies that might be.
Yeah.
Like, I might not know how to run a DCF from head to toe, but I certainly know the high level management operational dynamics that make a company either fail or succeed. And I know how to sell that. I think I can make the argument that I can make that I can sell that company." And again, Davidson is primarily an M&A group. So, not having to do equity issuances in a massive capacity, at least on a day-to-day basis, was why that actually played pretty well. And again, like that mad dash of 35 hours or whatever it is on the study guides, like helped a lot. Like you have to, and I always say this, my boss always says, you have to check the boxes. And then it's like, okay, what's the X factor or whatever it is? And social, market knowledge, knowing your DCF, like being the model expert, you can develop into a lot of those things though. But I think where
You
a
didn't
lot of
oversell.
folks,
You didn't oversell yourself and try to pretend.
I certainly didn't oversell myself.
You didn't
And
try to
I
pretend like you were a
don't think I
technical
could have.
wizard, accounting
No,
wizard.
I was never, and they had a technical, hour-long spreadsheet test, but it was more financial ratios and stuff like that, which like if you took Finance 301, you probably do that.
Mm-hmm. And so you checked that box. You weren't
Check
like,
that box, yeah. But most of the conversations I had, except for like that one, and I talked about this, that one like dreaded technical interview, most of them were organic conversations about what makes businesses tick, fail, succeed, whatnot. And I could have those conversations. I love those conversations. And because of that, I was able to kind of bring that through. And they were like, okay.
you probably just crushed those portions where they really loved you, and then they're like, okay, technically he's not like the strongest. He missed that depreciation. Yeah, he missed that depreciation account, whatever. But it's okay.
Yeah, no, I asked the VP that did my technical afterwards. I was like, hey, like so excited to work with you. He's a USC alumni, like I said. So I felt a little more comfortable with him and said, hey, but like, what was some feedback? And he was like, your technicals were not where they needed to be. But we think you can develop into that. And frankly, I did, because one, Davidson has a really good training program, and two, the culture there is very building people up as opposed to you are my competition. So second years help first years in an incredible way. The right associates help the right analysts in an incredible way, and VPs and whatnot. And where Davidson succeeds really well in recruiting is actually at the senior level. They're able to, especially in Orange County, like all of our senior VPs and up are former bulge bracket guys, and they've seen it, they've gotten out of it. And so they can take the good parts of the bulge bracket and say, all right, let's drop some of the harshest things and develop kids in a little more helpful way, I think. And then they also say, if we can do that like in a better manner, we can hold on to this talent for a longer time.
So when did you actually get the offer? What during the senior year?
I actually got it. It's funny because I transferred from Michigan. I think the week after my super day, Michigan State was playing in Ann Arbor, and I was like, I'm going to go back and visit for that weekend. And they called me like Friday night, right when I got off the plane, and they were like, hey, we have an offer for you. And I was like, signed, done. And they were like, well, do you want to hear it? And I'm like, sure. Accepted it on the spot. Like, no, there was no doubt about it. I was very excited.
That's awesome. That's awesome. But that was, when was that exactly? What was it? It was like a couple months.
First week of October, I want to say.
Pretty early on and yeah.
Early. And what I noticed is banking process is getting earlier and earlier and earlier.
Oh, it's you. Yeah. Yeah. That's late.
Like eventually you're going to be offers.
It's like sophomore years. Well, now private equity recruiting is like they hit the desk. I think it's going to kick off.
Yeah.
it's going to kick out. It's what, August 18th today, and I'm predicting it's
It's a
going
whole
this
thing.
month before I think last year went September. But anyways, 2 years ahead of when they actually start.
Yeah.
Okay, so let's talk a little bit about that transition. I hope you did something fun before you started. You had a 3 week gap between the Pinterest work and the. But yeah, it
Yeah.
sounds
So
like
I mean,
it was a pretty smooth process. Were you nervous about not getting that? Like, were you contingency planning in your head if you didn't get that banking offer? Were you now like, I need to do banking? Or were you thinking about that at all?
no, it was never, that. And frankly, like when I got into banking, I immediately like met the team and saw what they were doing on a daily basis. Like I could actually see myself doing this in the longer term. But
Mm-hmm.
after the VC internship, it was like light on fire. I know what I want to do long term. And
Mm-hmm.
in VC, like everything is deal flow. Everything is what kind of deals you're able to, like you can, it's just, there's a huge difference in good deal flow and bad deal flow. And if I was coming from USD, like realistically, if I was, 4.0, took my GMAT and got the perfect score, whatever it was, like there's a very little chance that I was getting into a strong deal flow VC. So I knew the best way to get into that candidacy role or candidacy universe was to go to investment banking, develop the skills. And then it was actually, pleasant that I actually enjoyed that experience and that team and that content. And I said,
It's
maybe I
interesting
can do
because
this long term.
we've recruited for some VCs and some small family offices, and
Yeah.
sometimes they get mad at us because like WSO is so banker heavy, and we'll like send them some incredible candidates from like
Hmm.
banking that want to get into VC, and they're just like, no, there's no like accelerators or VC, so you'd be fine because you had that university growth fund on your resume. But
And it's
you know what I mean?
rare. Like internships in VC is like, why would you do it?
But
Like
even
it
startup
is.
experience, they wanted to see something like about the startup universe, and I get that. That's fair.
I totally get
Yeah.
that.
Yeah.
So, and then like I come back to the narrative point that maybe I already beat dead, but it was
They're
kind of
your
one of those
dogs. They're
things.
your dogs.
Yeah,
No
I
worries. Don't
figured
worry.
at some point they
What
would do
kind of
that.
dog? What kind of dog?
I too. I got a English cream golden retriever and then a Newfoundland, which is as big as you is just big,
Sounds
and
like it.
that's the loud one.
Yeah,
Yeah,
it sounds like
yeah. And
Go ahead.
they'll wake you up. They do your alarm clock in the morning for you too. But what I was going to say is like, then once I got into investment banking, I could say it was that first time where I could be like, okay, I could actually learn the technical skills that you need me to get to. I had the qualitative, I needed to do the quantitative. And so like 2 years later, when it came to VC recruitment, that was my narrative. I went into investment banking because I wanted to get into VC. I have some VC experience, albeit internship experience.
Mm-hmm.
This is the narrative I told, and it came through because it was genuine. Like I had that experience. The light switch went on. I knew I wanted to do it, and then I went and made myself better through investment banking.
Fair. Okay, let's talk a little bit about banking though. So it sounds like it was a great
Yeah,
experience for you. Were the
yeah.
hours like 70 plus, 80 plus? Was it?
It's not New York or San Francisco banking.
Yeah.
Um, it is what I was like told when I was taking calls is it's like realistic hours, but like reasonable hours. Like you were on
Yeah.
average 70, 75.
Yeah.
And your peaks and your valleys, but like
That's a lot.
we were,
It's a lot of hours.
it's a lot of hours. And don't get me
Yeah.
wrong, if you're working on okay, but I always say it's 75 bad hours versus 75 good hours. There's a huge difference. So if you are
Yeah.
doing buyers lists and scraping LinkedIn's and whatever, that might not be the most 75 fun hours. But if you're actually putting together, making the model, doing this quality hours that can build your skill set at the same time, you are on the calls with the buyers and doing whatever that is in non-M&A land, that's going to be a lot better of a lifestyle. And I actually joined our Davidson technology group at a very fortunate time. I think we were 6 or 7. I might have been our 6th or 7th headcount. And by the time I left 2 years later, 22. So
Oh,
they were
wow.
growing really quickly. I got in when we were really resource constrained on the associate analyst level.
Mm-hmm.
So what that meant is I was working on a lot of deals that were like maybe MD, VP, analyst only.
Yeah.
And the MD's sourcing. And so it's VP. And
It's basically you and the VP.
Yeah.
Yeah.
And I had a great VP who's a former Goldman guy, a former merchant banker too. So like he got it. And he
Trained
was
you
really
quickly.
nice to, yeah. And other great directors. I mean, like there was no one in that group that wasn't great, to tell you the truth.
Mm-hmm.
But I had a very good experience because of that. And if he trusted me, which I would like to say at a certain point he would, like he would let me take some of the buyer's calls. And all of a sudden, like I say, like you don't understand a business until you try to sell it. And those investors and those private equity investors, like we sold them to private equity a lot. They'll
Mm-hmm.
ask you tough questions. And once you start realizing what they're going to ask you, you really understand how to meet with a business, how to talk to an operator, and relay that information. Because a lot of what the banker does is like tell the founder, the CEO, the owner, whatever it is, this is what investors are going to look at. Whether or not, we care about that, this is what they care about. And so understanding that just made you a better banker, a better commercial banker.
And you kind of already had some of that, you already had some of that insight, I feel like, for VC, just looking at, the metrics, unit economics, all that good stuff that you probably were trained on.
Qualitative stuff, I like to say. And again, when we were selling middle market tech companies, like, to tell you the truth, like, some of them were great margin companies, but a lot of them were cash flow negative. And all of a sudden it's like, you can model whatever DCF you want to do, but if you can't tell the story of, 2 times 2 times 3 growth over the next 3 years, no private equity, no growth or private equity buyer worth their salt is going to listen to your call.
Fair enough. Okay. So you're going through this. At what point are you thinking, I got the skills now that I wanted? When am I going to start looking? Or, are you kind of, you're still networking
That's a good question.
throughout these whole 2 years? Or like, what's the thought process?
Honestly, I was way more head down than you might expect someone who got into VC. I really liked our team and I really liked what I was doing there. And living in Orange County, I saw, a 10, 20, whatever a year, hopefully not 50 year, retirement plan, but I saw a future in investment banking. And it wasn't until I went into and got thrown some opportunities, whether it was from, my former GPs at University Growth Fund, they're like, hey, you should probably look at this, or a recruiter reaching out, and like actually putting an opportunity in front of my face where I was like, oh, I forgot, like I really wanted to do this and I still really wanted to do it. I got in contact with a phenomenal recruiter at Hunter SF, and show me a couple of things throughout probably like a 12-month timeline. And, the recruiter matters. There's a couple ways to do it. You can do the networking and try to go to the hire director, but like recruiters are really good at what they do, and the right VCs hire recruiters, VCs, private equity, whatever it is. Especially if it's not, I think, I'm not the expert here, but I think especially if it's not a class hire. So it's like, hey, we're, taking,
there's this one person we're looking at.
There's one, we're taking it, and recruiters and VCs, like they typically hire outwards a little bit. So not recruiters, but like recruiter processes. It's less, hey, we want an associate for 3 years. It's like, yeah, we want an associate for 3 years, but like also what maybe could they do for us in the future? Can they grow into a higher role than that? And so those are long processes. And I had a great recruiter, and it was one of those good relationships where it was like, hey, this might not be the best fit for you. It's not just throwing your resume at everything. It's like, let's let you do your day job, which is, those 75 plus hours. And then the ones that, like, I took a little more targeted approach to it. The ones that are like the good fits that don't require the bulge bracket resume, I went really, really hard for those. And there were a few that I thought I was going to get that I didn't get. I mean, VC is a absolute crap show. That's what I realized very quickly on. And this was a fortunately great fit.
Perfect. And so, you were basically just kind of not in a rush, trying to find the right place. And when you found the right place, you pushed hard. But would you say you made it to like 3 final rounds before kind of that first offer?
Yeah. There were, and final rounds in VC are a little less structured, right? So you don't.
Yeah, it's like you're in a final round. You think you're in a final round. It's like, no, just kidding. You have 3 more.
Yeah. I mean, there were several processes where it's like I had 8+ conversations, and like I had no idea where I was in the process, and like the recruiter can only tell you so much. Like there were times where it was like, like we got to the end of our cycle and we didn't hire anyone. That's what they do. It's fair. It's their prerogative. They're looking for a really good fit. And then also throw in the little curveball that was COVID in the middle of my recruitment. Like that was absolutely crazy.
Yeah. So what kind of, do you mind talking a little bit about like range of pay, given it's a boutique? Like, you don't have to give exact numbers, but is it, I'm guessing, and tell me if I'm way off, like base of around 70 to 80 for
this banking. Is for Davidson.
Yeah, for banking, the couple of years, I'm saying like 70, 80, like bonus 50%-ish. Is that fair? 20?
Yeah, that's about right. And then they made a step upwards too, to try to be a little more competitive, like a 5K bump in all of their first, second. So it's a 3-year program actually, Davidson. Okay. Too. And
were they upset at all with that you jumped, or they were supportive?
The vast majority were very supportive, but like you're always, especially when people like pour into you the development aspect and like not out of the
VP,
office
man.
too.
My VP, same thing. When I left, he's like, dude, come on. It's like,
my VP was actually great about it because I think he had the Goldman experience. But again, like when certain people put a lot into you and they tell your face like, we could see you here a long time, like I don't blame them for 1 second for being like, come on, man.
Yeah. Yeah.
And again, you're not like a year in and all of a sudden you're like, oh guys, just a heads up, I might want to do VC. Like you don't have those conversations.
Yeah. Do you feel like, tell me about what you feel in terms of just how you view your career mapping? Because like you said, you put your head down, you're obviously doing a great job. They saw you developed those technical skills, you're doing well. I assume you're well ranked, and the group is growing, and everything sounds like it's great. Like you're probably going to get that associate promote, or direct associate promote, maybe not have to go get the MBA.
Yeah.
So there's a lot to be said. Like you even said yourself, like I could see a career here in banking. So tell me like how you view like VC in terms of like a career. Like obviously it's interesting. And there's like the deal flow aspect of VC. Like you said, you wanted to get to a place with like where you like, is there any concern or fear in terms of like, I'm taking a higher beta, higher risk.
Oh, 100%. 100%. I mean, especially when you're already in the place and you already feel like you have like a foothold in the group and like a role in the group, and like you don't have to necessarily push hard on the gas to get there. Like you're going to get there as long as you don't let the foot off the gas. No, that was a risk. And I think it came down like a very overly simplistic view. It's like, do you want to sell the $1 billion company, or do you want to find that, pre-seed company that turns into the $1 billion company and sit on the board long term? And for me, like where I found myself as a banker was like, I always wanted to have those conversations with founders. Like, hey, how did you get from here to here? Like, where can you get in the next 3 years? As opposed to
like earlier state, you wanted
earlier. I want to be their advisor, honestly. And like, I think you talk to the best VCs and you listen to the best VC podcasts out there. The best ones are the best board advisors at the end of the day. And
they're the best board investors. They're the best what?
They're the best board members and advisors, and literally just like someone that you can call when you're raising the next round. You need a good introduction to the right VC as opposed to just any, $10, $15 million check. It's the right $10, $15 million check. And, the best VCs are the ones that enjoy the advisor role as much as the investing role. Yeah,
that's cool.
And I think that was the question I had to answer.
You kind of knew. Yeah, you said, I could do this and I'd probably be happy and I'd do well, but there'd always be kind of that thought of, hey, maybe I should have gone VC.
Yeah, and listen, like this could be I could have a different perspective if like
in a couple of years, maybe you'll be back. Yeah, maybe
if I go over, that might change, but let's hope that's not the case.
Tell me about that thought process of like being able to leave and then come back. Do you feel like that group would potentially be open to it down the road? Maybe you want to go.
Yeah, that was a month ago.
So no now.
Probably, no's right now. But I mean, I've had very candid conversations with those folks. Like, I don't care what capacity it's in. Like, we want to work together in the future. And I think if you leave every business relationship like that, good things will happen, and your network will grow, and you won't burn those bridges.
For sure, man.
Hopefully.
Yeah. Any other words of wisdom in your short career that you would like to kind of share with the listeners for some of the younger guys and gals out there? Anything else?
Yeah. I mean, I think it really comes down to like, again, maybe we touched on this in the beginning, but like, and it's so corny. It's the passion economy though. You have to make it what your own. Don't go into the job because of the money. Don't go into the job because of the name and what your dad or your mom tells you to do. Or it's no 2 years in anything are worth something you don't like to do. Whether that's banking or whether that's, renting surfboards in Orange County, right? Like, don't do anything you don't actually want to do because it will leave you in a step back as opposed to a step forward. So I've seen it a million times. And fortunately, I have been able to not go down that road. I've liked the things that, set me up for the future, hopefully. But,
any advice for people who are kind of at non-targets and they don't get that banking offer and they're kind of, they're like, let's say they weren't as aggressive, they're not as well spoken on those interviews where they're able to, maybe they're a little more nervous in the interviews.
Absolutely.
They're passionate about it and they want it, but like, let's say they get to the end of their senior year, they have nothing lined up. What would you suggest for those people?
It's a great question. I think when we look at investment banking specifically, and then like what comes after investment banking, whether that's buy side or whatever it is, there seems to be very defined roles. And I think like that's only for the bulge bracket, to tell you the truth. I think that there are people willing to listen to a very unique story. And whether that's going to an MBA or starting your own company or going to work with a startup, like there are so many other opportunities that make you a good candidate, if not a better and more unique candidate. I think always ask the question, like, in that person's job, what are the skills that make them not just like competent, but like good? And a lot of the questions are not, or a lot of the answers to that questions are like, go being an operator can get you the same skills as I got as whatever, right? Like if you want to go work for a startup or a growth stage company, there are so many of those out there, and you can go be a business development representative and, in the first 30 of a startup and get better experience than I got in 2 years in banking. End of story. So I think there's a lot, if you really know that that's what you want to do, there's a lot more ways into it than we think.
When you say know what you want to do, you mean banking or just finance?
Whether it's banking or finance is a good example, because it just feels like there's like these.
Finance, finance feels it's like very defined. Like if you don't do banking, then you should do like transaction advisory services at a big four. If you don't do transaction advisory service, maybe do like a corporate finance or FLDP program or whatever. And so like it does feel kind of like these like stages where, I think there's something to be said where it's more about the skills you're developing, whether that be being like, are you getting the technical skills? Are you doing any of that modeling? And there's a lot of self-study.
Yeah. Programs like we at Davidson, they did Wall Street Oasis. Like there are, and like that, but like also reading literature, like as corny as it sounds, like read Barbarians of Gates, like read stuff like that, like actually understand what people are talking about instead of just like 400-page study guides.
Yeah.
Like that will get you
like, I want to get to banking. And they're like, why? And you're like, cause I like looking at companies and analyzing.
And you hear that
bullshit.
Too much.
Yeah.
And it's just, it comes through too much. And again, so like look at skills and look at all the different places you can get them. And I think that the right people, which hopefully are the people that are hiring, will find that.
Great. I think we'll call it there. Barrett, thanks so much for taking the time to join us and share your wisdom. And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick@wallstreetoasis.com. Until next time.